PDAC Mining Snaps 2016, and I'm very happy to have another special guest with me, Mr. Jeffrey Christian of the CPM Group. Thank you so much, Jeffrey, for coming on.
Sonny, it's always good to be here.
Excellent, thank you. And we have Jeffrey every year, and it's a delight. And we talk about several things. You publish the CPM yearly annual silver book as well, and that'll be coming out soon, I assume, right?
The silver book comes out in late April. The
Perfect.
gold book comes out in late March.
Great. So watch out for that. But before we get into that, the topic, today's topic is, gold is up, but the banks still forecast lower prices. Which you see some banks still say, gold, even though we had this run up, they still forecast $1,000. Goldman is saying that, BNP Paribas is saying that as well, 980, even 860 for next year. What is your opinion on these forecasts? What is your own forecast?
Well, our own forecast is that the price probably made its bottom in December. We do expect the price to come down, but we think it'll come down probably to something between, say, $1,130, $1,180 over the course of the second and third quarters, and then pick up. I think that what you have to understand, most banks don't really have research departments. They have research analysts who sit on their trading desks, and their research is the information that they get off of their Bloombergs and their Reuters and what comes across. And a lot of them are basically trend followers. So when the price is falling, they draw a line on a price chart and they're bearish. When the price is rising, they draw a line on the price chart and they're bullish. And I think what you're seeing is a trailing effect. Also, the banking industry in terms of gold and commodities has been decimated over the last 2 or 3 years. So a lot of people are extremely cautious about getting bullish because they've been under the gun for so long. Right.
So we've talked about, is there enough legs for gold to maintain its run here? You've seen the Shanghai and the Hang Seng stock exchanges come up from their lows in January. And especially with the yuan being devaluated, is that still suspect to happen again? Is that a tool that China can still use? And how does that affect gold going forward, the gold price?
Well, the Shanghai Stock Exchange is reflecting investor concerns about the Chinese economy.
Right.
And we continue to be probably more optimistic about the Chinese economy than a lot of other people. It has a lot of problems, as do almost all of the major economies and the global economy as well. But we do think that the bearishness that we've seen over the last couple of months has probably been overdone in terms of Chinese economic outlook. So we think that the Shanghai stock market will dust itself off. That said, I don't see it going back to where it was last June. And it's very important to watch the sentiment there, because in June, the Shanghai Stock Exchange Index fell 25%. And no one got out and bought gold and silver. What they did was they said, this is a bubble that's been deflated by the government, and now we're down 25%, but we're still up about 80% from a year ago. So they came in and they bought stocks. The same was true when you saw the second leg down in August. But then in December and January, you saw the Shanghai index go down to extremely low levels, and that was really a clear sign. And it occurred at the same time the S&P was doing it in the United States. That was a clear sign around the world that the U.S. and the Chinese stock markets peaked last year. And while they may not collapse, they're not going to go back to where they were in June of last year for a long, long time.
What are your thoughts on worldwide country gold holdings? So you see, we've seen a number of announcements of late. Russia has seen their holdings increase to 46.2 million ounces. Kazakhstan increased to 7.2 million ounces. China has around 58 million ounces. Who are the top gold holders, and do you expect a lot of these countries to continue to increase or decrease the gold holdings?
Well, the top holders are still the United States, the IMF, Bundesbank in Germany, Banque de France, and Banque d'Italia. Those are still the largest people, all with more than 80 million ounces. In the case of the U.S., 261 million ounces. China's been building its reserves, and I'll get back to that because that's extremely significant. Russia has been rebuilding its reserves for several years now, and Kazakhstan and Belarus and the Ukraine before the war with Russia started were all sort of going along with that, rebuilding their reserves. Russia has been trying to rebuild reserves that were plundered in the 1990s after the Soviet Union collapsed. And it's facing sanctions. It sees the United States as a very hostile enemy toward Russia, and so it's been building its reserves accordingly. With the lower oil price, it has less steady income in terms of foreign exchange, so it's probably slowing its gold purchases. Although I will hasten to say, almost all of the gold Russia central bank is buying is domestically refined, either from mining or from scrap.
Interesting.
Now, China is the interesting one because we saw in 2015 the People's Bank of China change their attitude toward gold.
Yes.
For 60 years, they were saying we don't see gold playing a significant role in our monetary reserves. And in 2015, they said we don't see gold playing a major role in our monetary reserves, and we don't see it as a basis of an international currency regime. In terms of currencies pegged to gold. But we see gold as playing a small but significant role. And we're adding 19.4 million ounces of gold to our reserves in June. And we're going to continue to buy, mostly from domestic refined output. And as we buy it, we will add it to our monetary reserves going forward. And they bought 600,000 ounces a month ever since that time. And China, will probably continue to buy 5 or 6 million ounces a year. And other central banks will probably take a cue off of China. So we expect now that we will see more demand for gold from central banks around the world going forward than we would have thought as recently as last June.
Right. Well, it's also in the best interest of China to continue because they now have a seat on the gold fix, right?
Well, there's a Chinese bank that has a seat on the gold fix. But I think people still think of China. China is still a communist country, and it still is a managed economy. And there's a great amount of cooperation, coordination between major banks and major corporations and the government, as there is in the United States and Canada and other countries. But I think you have to understand that the bank that has a seat on the fixing is a private bank.
Right.
And the company that has joined the World Gold Council is a private company.
Interesting. Okay. So let's talk about interest rates now. Interest rates have been a very interesting thing to watch over the last few years, especially with the Fed. As I was speaking with another guest, they raised the rates marginally, but now they're cautioning and with Janet Yellen's comments about the equity markets, more riskier borrowers having an inability to get more loans. The Japanese bank has announced negative interest rates as a central bank because they're just fed up. They need the banks to start giving loans and get the economic engine going again. So how do interest rates play out, do you think, in 2016-17?
It's funny because there's been so much attention paid to the potential rising U.S. interest rates. And we've been wasting a tremendous amount of attention saying no. First off, it's a bad idea. Second thing, if it does come, it will be much smaller and slower than people had expected, and that's what we're seeing. But the really important and interesting stuff for gold is on the negative interest rate side and the low interest rate side. And it's been clear for at least about 5 years now that we've entered a new paradigm in terms of interest rate markets, where you have a bifurcated market where you have very low or even negative nominal rates on benchmarks in now Japan, the ECB, Sweden, Denmark, and Switzerland. And you also have very low but real nominal rates in the United States and other countries. And what has happened is that you have any number of private investors, funds, banks, and central banks that are saying, okay, if I keep my money in overnight funds, I'm paying interest.
That's right,
So I'm losing money every day that I keep my money in overnight funds.
Especially with the bonds as well.
The central banks want me to lend it out, but I'm still very hesitant to do that. But if I buy gold, buy spot gold or buy 1 month forward, and I hedge it 12 months forward, I pick up, depending on the day, because of volatility in the market, I can pick up 35 to 80 basis points. And that's not a great return, but it's a lot better than paying. So one of the things we've seen over the last year and a half or so that's helped contribute to the gold price not falling further, and that has helped contribute to the rise in gold prices over the last 2 months, is that you've seen a lot of very short-term investment demand for gold, which really isn't investment demand for gold. It's parking your money in gold, picking up that 30 to 80 bips. Rather than paying into the negative interest rates.
Interesting. Okay, so let's now talk about Indian gold demand and more so on with a lot of these tools that the Indian government is putting forward to kind of decrease the demand for gold, as imports just continue to increase of gold. They can't do anything about the current account deficit. Still is not being addressed. So a couple of examples. One that was more recent is one of the temples, the Tirupati temple, is considering to deposit around 70,000 ounces of gold with this gold scheme that they brought forward, and they currently have around 4.5 tons already deposited with the banks. Now, this is just as a generic case. We've seen other temples deposited gold with the government of India, but not much of an uptick. Do you expect more, more of these religious institutions to devote their gold to the government?
I think you will see that, but you have to put it in context. First off,
Okay.
India has more gold above ground than any other country in the world. Probably more than 500 million ounces, which is like 10% of world global production throughout time, is above ground. And a lot of that is held by individuals.
Right.
And the individuals don't necessarily want to give their money to a bank or the government for this gold scheme, because they hold that gold, especially because they don't trust the government or the banks.
That's right. Yeah.
The temples, however, also have a lot of gold, and the temples have tax-exempt status. So the government has gone and sort of squeezed the temples and said, look, it'd be terrible for you to lose your tax-exempt status. So why don't you lend some of that gold? Also, because the temples are temples and not individuals, they probably feel a little bit more comfortable or less passionate about giving up physical holdings of their gold to a bank or a government. So I think you will see some, and it's going to be 30,000 ounces here, 10,000 ounces there, 70,000 ounces there.
Interesting.
It will be significant, but it's not going to be such that it's going to derail the private sector and individuals interested in holding gold going forward within India.
Interesting. Okay, well, thanks, Jeff, for all the insight that you've given in on gold price and gold demand going forward. If you want more information on CPM Group, we'll leave the details below on the video there. You can find out more information, as well as their annual release of the silver and the gold book. Thanks, Jeff. We appreciate it.
Thank you. It's always a pleasure.
Cheers.